Hey everyone, so are you interested in the future of investing? In this video, we'll dive into the world of sustainable investing and you'll find out how to generate additional financial returns while also having a positive impact on people and planet. Let's get into it. So sustainable investing has grown in importance over the past few years, and this is due to the theme of increasing environmental degradation and also increasing social progress. This means that these financial factors that perhaps weren't an issue in the past are now becoming increasingly important. Furthermore, the world is increasingly connected. It's impossible to think about things in such a siloed manner anymore, so we need to think more holistically when we're making decisions. Another reason why sustainable investing is increasingly important is due to the energy transition. We've realized that our current energy system is unsustainable, that is the one that's based on fossil fuels, and the world is currently transitioning to rely on more renewable sources. The Inflation Reduction Act in the US is a great example of that, and Japan has recently approved their own version of fiscal stimulus, which is encouraging investment into sustainable energy sources. So what is sustainable investing? Sustainable investing is about incorporating sustainable information into investment decisions and stewardship activities. This enables the creation of a portfolio that properly takes into account the risks and opportunities from sustainability, while also minimizing the severe adverse impacts on people and planet. Some of the key principles behind sustainable investing that you might have heard of is ESG factors. So these are environmental, social, and governance factors that can influence the performance of an asset. So another principle is stewardship, which is the active ownership of an asset. You might have also heard of engagement. So this is the process of enacting your stewardship activities. So we define engagement as productive dialogue with a specific objective in mind between two counterparties. And then the final principle that's behind sustainable investing is impact investing. So this is generating a positive environmental or social benefit alongside a financial benefit. And there are opportunities out there, believe me. So why might you invest sustainably? Well, sustainable investing has been shown to have improved financial outcomes and also limit its impact on people and planet. Studies show that strong ESG performance correlates with strong financial outperformance, and also sustainable investing can help mitigate against severe adverse outcomes in the financial sense. So some examples from each of E, S, and G. Obviously, with G, you had the Enron scandal. That was a severe adverse governance failure. On the social side, Vale, they had a dam that burst that killed 250 people, and also so the financial ramifications of that were extremely severe. Stock price fell like 20% within a week. Then you've also got the PG&E bankruptcy, and that was a company that filed for bankruptcy after wildfires in California damaged its assets, and those wildfires were obviously caused by climate change. So what are the ways in which you can do sustainable investing? So way number one is negative screening. So this is removing certain companies or assets from the portfolio that have poor ESG performance or poor impact on people and planet, or severe adverse impacts on people and planet. So that might be thermal coal companies, tar sands, or any companies linked to controversial weapons. Another strategy is positive screening. So this is where you only include companies in your portfolio that are very strong sustainability performers. Another way you can do sustainable investing is to just integrate sustainability information into your decision making. So this is done more on a case-by-case basis and not on a rules basis. So you can achieve a lot more flexibility and you can better assess sustainability risks and decide whether or not you want to take that risk or not. So for example, you might have a particular view on the speed of the energy transition in a particular market. Therefore, you might want to buy an oil company now, but might not want to hold it for 10 years. So this is the most common sort of sustainable investing that I see in the market. And then the final strategy is impact investing. So I've mentioned that this is where you look for positive environmental or social impact alongside your investment returns, and often you can find market level returns while also achieving that positive environmental and social impact. And this is becoming more and more common within sustainable investment. So there we have it. That was a quick intro into sustainable investment. I hope you enjoyed it. We went through what sustainable investment is, why you might want to do it, and certain ways you can do it. I would say if you want to do more reading and research, then there's lots of resources out there. So there's obviously the CFA's ESG course, which you can do. And there's also a couple of books which you can read. So Donut Economics by Kate Raworth, Reimagining Capitalism by Rebecca Henderson, Values by Mark Carney. So I'd recommend all those books. I hope you enjoyed that video. If you want to watch more from me or you enjoyed the content, then please do check out this video here, and I'll see you shortly.